This is Walgreens on the monthly chart, and the sell setup is still valid as price has not penetrated the zone as of yet. Typically, you increase your probability of trading going with the trend, thus making this sell level that much greater. Scrolling down to the weekly chart, you can see that within this monthly sell level, let's put some lines around the bulk of the level of interest. That's going to be this meat here, which caused the significant drop, denoted by 1, 2, 3, 4, 5 red extended range candles. Before we continue with the analysis, let's look at this video because we did get a pop this week. So Walgreens just made a historical move after 47 consecutive years of dividend increases. The company slashed its payout. That could be the reason why we saw a bounce. The drugstore chain has suffered from flattening sales and expensive legal settlement over opioid claims and struggling medical clinics. Still, the dividend cut was a dramatic move when the company was 3 years short of dividend king status. The question for investors is whether the drop in the stock makes Walgreens a buy, or if this retail stock will bring further illness to investor portfolios. Admittedly, many investors are probably not surprised the company made this decision. The drugstore business has become increasingly competitive through the likes of competition from Walmart, Costco, Whole Foods, and even Amazon. Moreover, Walgreens and some of its competitors were found liable for enabling the opioid crisis, a crisis responsible for an estimated 500,000 deaths over 20 years. Walgreens' share of the settlement called for $5.7 billion in payments over 15 years. Unfortunately, the lower dividend cost may not be enough to draw fans into the stock. Investors will still earn a dividend yield of approximately 4.25% after the dividend cut, still well above the S&P 500's 1.5% average. Fiscal Q1 revenue rose 10% to $37 billion. Still, the rising cost of goods sold led to a slightly lower gross profit. Also, Walgreens reported a net loss of $278 million in the quarter. With only $784 million in cash, it holds little cushion to sustain losses and maintain the remainder of its dividend for long. All right, so those are the fundamentals. You have the technicals. The fundamentals are in alignment with the technicals. We're going to scroll down to the daily chart. And you did have this rally in price, basic candles in the rally out, taking out the pivot high, and also to what was daily sell levels. So when you see this, didn't quite take out the top one, as you didn't have any candle closes above the upper portion of the zone. Nevertheless, took out a pivot high and sellers at the 25.50 level, making that daily buy level valid, which is also supported by your momentum indicators. Also, the 50-day moving average is starting to point up. So I do think there is a bit more upside momentum. Not much. You're at least going to close this gap. This sell level is no longer valid, as all the unfilled orders have been filled. Again, macro picture, best levels to short the stock is at the monthly sellers level at $30. Look for your target to come in at the $17 level.